Folks, this is the third of a three-part video series we're doing on pullbacks. In the first video, I explained the problem how when you're looking at chart patterns, things can get a little subjective. In other words, if 10 people look at a chart, they'll see 10 different things. I want to create a situation, an environment, a scenario, a dynamic where we're all seeing the same things. And we can do that with technical analysis tools because they're objective. They're a little laggy. In other words, they lag behind price, but that's okay for pullbacks, especially with these indicators. These are very, very firm tools. The RSI oscillator is it takes a lot of work to get it to move. It's not one of those tools like a stochastic oscillator where if you blow on it, it'll just become overbought or oversold. It moves like the wind. The RSI does not. So we changed the RSI to 10 days. Let's look at the chart again, and I'll go through some examples and go through this example one more time. All right, so we're looking at Amazon. And you know what? Because we've already looked at Amazon, why don't I change the ticker symbol to NVIDIA? All right. NVIDIA's in a downtrend, or it's been kind of sloppy a little bit the last few months, but now it's rising back up. So notice here, it's a strong downtrend, and it picks up right here. So let me give you an example. Let me expand the time frame a little bit here. It's on a daily. We always do these analysis on a daily time frame, okay? Just keep that in mind. So let's look at a strong point in NVIDIA. Let's look at a 6-month chart here. All right, so NVIDIA's trading strongly above the 50-day moving average, the 20-day exponential moving average, right? It pulls down. But as it's pulling down, you could see here price is just becoming oversold. And if it keeps coming oversold, right here, we would enter right there. Let me actually draw some lines on this chart. Use this little fancy schmancy pen I have. But you see right here, you would enter right there. Even if you entered right here, that's how much the drawdown would be. And then you would have a total upside all the way till right here. That would be your profit target. Let me show you another stock. Let's just do a couple of these, all right? Let's look at Microsoft, all right? We looked at Amazon, we looked at NVIDIA. Let's look at Microsoft. And again, 20-day exponential moving average coupled with the 10-day RSI. The standard setting for the RSI is 14 days. Now, look at how sensitive, non-sensitive the RSI is. Look at how much Microsoft comes down, and we barely made it down here. Technically, this works because we touched the red line. It doesn't have to go below the red line. That means it's oversold. If it hits the red line, that means it hit 30. That means it's oversold. Notice it's moving up, up, up. Notice it doesn't even come close. And that's what I love about this RSI oscillator. It's not sensitive. So let me draw this out for you here. The trend is moving up. The stock begins moving south right here. We're oversold right there. We enter right here. And we would ride this all the way till right here. Not bad, right? Let's do one more example. Let's see, what stock should we pick? How about, let's do Intel. How about that? Chip stocks, volatile stocks. I used to love trading Intel in the old days. And again, let me do this for you here. We have a strong uptrend. We're trading above the 20-day moving average. We have a gap down. We come down here. We get into the oversold territory right here. You enter. Notice the downside is right here. It's not that much of a downside. And you ride this. You get in right here, and you ride this all the way up to here. Not bad, right? You enter right around the $43 level, and you ride it all the way to the $52 level. That's like 18% gain in 2.5 months or about 2 months. You enter right around the end of May and you get out around the end of July, excuse me. So yeah, you held it for about 2 months. Let me get rid of all this junk that I drew here for you so you can actually get a good idea again. I'm not an artist. There's no Picasso here. So again, trend is up. You wait for a pullback. You break the 20-day right here. Nothing so far here. You wait, you wait, you wait. Here you would get your first sell point right around here. You would stay long, maybe accumulate a little more. And again, you would enter right around, you would begin entering right here. Here it stays oversold. You would stay here. You would accumulate right around here. And then you would be buying all the way from, let's say, 45 to 42, average 43, and you would hold it, hold it, hold it, and you would liquidate right here. All right, that's the 3-part video series on pullbacks. I explained to you the long-term trend, the short-term trend, how to identify the pullback, how to identify the exit, and how to use the 20-day exponential moving average to gauge all of it. Hope it helps. Talk to you guys soon. Take care.